Hey guys, my name is Brandon and today will be my first video in a series where I will be breaking down some key technical analysis skills that can be implemented into your trading strategy like they are in mine. Today I will be starting with the one that I had the most trouble with understanding when I first started trading Forex, and that will be the Fibonacci retracement. So if you come over to Trading View here, I will start with the very basics of where to find it in Trading View, what percentages and what numbers you might want to change from what the default is, and then I'll give you guys some examples and show you really how it works and how you can use it to your advantage. So if we start on Trading View here, I am on the Euro US dollar on the hourly chart. I am going to go back a couple months here to a specific place where I used the fib retracement to my advantage, along with many other things, because we don't want to be just using one skill, one analysis, one confluence to base our trades off of course. But the fib retracement proved very useful for me here. So first off, if you're new to Trading View, new to using the Fibonacci Retracement Tool, I'll show you where to even find it in Trading View. So come down here to the third. Usually this is defaulted at Pitchfork, I think. If you come here to the drop menu, it's down here, fib retracement. So first thing, we're going to start off with where to place our points of the fib retracement. This was the thing that I had the most difficulty with when I was learning how to use this tool. Now that I do it, it makes a lot more sense. It seems so simple, but I remember when I was learning how to do this, it took me a long time to figure this out. So I'm going to try to break this down for you guys as easily as I can. So if we come over here, let's first make it clear where we would be if this was a live trade and we didn't have all this other data to see what ended up happening. So if you're analyzing this downtrend here and live, you're at, let's say, about this point. All this data, we're not sure yet. We're right here on this bullish candle. So you're watching this and you may be thinking, all right, are we turning into an uptrend here? Is this downtrend no longer valid? And this would be a time where the fib retracement tool could be very useful. So we're going to take our tool here and you're going to go to the highest point when the downtrend started. And if it's an uptrend, it's vice versa, the lowest point before the uptrend started. So for a downtrend, we're going to go to the highest point, and then we're going to go down to the lowest point. Extend this down to our lowest point. So you can see the 100% is where it was before the downtrend started, and 0% was the lowest point that it hit so far. Keep in mind, this black trend line here that I have, this is where we are live. We don't see any of this if we are doing this live. So I took it from the top and to the bottom. So now I'm thinking, all right, is this simply retracing and then going to continue downwards? Or is my downtrend now reversing into an uptrend with this bullish candle? Because this bullish candle would be very deceiving to see live. When you see this massive candle, you would assume, oh boy, we're switching here. I better get in, I better buy, or I better change my bias to no longer being a sell. So before I dive into the rest of this, I just want to make it clear about all of these percentages here, because I know Trading View doesn't always default these to these exact percentages. So I'm going to leave this up on the screen for you guys if you want to copy this down. This is what I know any trader I have studied, any mentor I have, any news sites, trading sites that I see, these are primarily the percentages as they use. So if you guys want to copy that down, I highly suggest it because that's what I do. So when we come back in here, we're seeing our downtrend start. We hit this. As I said, we start to go up. We're worried this might be a reversal. So you take your fib retracement tool and you're watching this live. You're watching for a possible bounce at the 50%. You're watching a possible bounce at the 78.6%, 38.2%. Any of those could prove to be resistance, which would indicate it was simply a retracement. So here you can see we went past 38.2, no problem. Went past the 50%, no problem. At this point, I'd start to see, all right, we've already passed 2 of the fib retracement percentages, so I'm not so sure. This may be reversal, but I would wait, I would monitor it. Sure enough, as soon as we hit the 78.6% part, we start to get some resistance. We bounce back to the 50, a little bit of consolidation in between the 50% and the 78.6%. And eventually we hit that 78.6% fully, we bounce off of it, and we start to come down. We're coming down, we're bouncing off that 50, and finally we hit that 50, and boom, it drops. It continues this initial downtrend. Now, after this bounce off of the 78.6%, as I said, you see it hits that 50%. Personally, what I did was, as soon as I hit this point and I saw this big bearish candle, my bias was 100% back on sell. I was, okay, this is likely a retracement. If you're a bit more aggressive, this would certainly be a time where you could enter. Now that you see this bouncing off the 78.6% and even bouncing off the 50% once again, now it's time to talk about the negative percentages. Now, these negative percentages can be an indication of where these bounces may lead to. Now, if I was in this trade live, when I saw this 78.6% bounce, I would be looking for these negative percentages to be hit, because oftentimes, once these percentages have a strong bounce, at some point it's going to extend down to these negative percentages, these 2 right here. Sure enough, we see we go down, we bounce off that 50%, as I said, and we're making our way down pretty fast. We hit that negative 27%. Now, if I was in this trade live and I decided to sell at the 78.6% mark, I would be looking to place my take profit possibly at one of these negative percentage marks. As this video continues, I want everyone to keep in mind that no matter how perfect a fib retracement setup may seem, make sure that you do not base your trade solely off of this fib retracement. There's so many other confluences that need to be present in order to make a responsible trade. As you can see, once we bounce off here, we came right down to our negative 20%. And even then, we came right back down to our 61.8. And it ended up being like almost perfect. We did go below the 61.8, but we closed almost perfectly on the 61.8 fib retracement. So that right there is a pretty perfect example of how useful this tool can be, along with other technical analysis tools. So I'll just reiterate here to summarize this one trade. We saw this downtrend occurring. We saw this big bullish candle, and we were concerned, is this a retracement? Is this a reversal? Not sure. So one of the skills we can use is the fib retracement. We come to the highest point, click, come to the lowest point, we'll extend it here, click. So we bounce off that 78.6%, and we're going down, bouncing off the 50, which reinforces your bias to a sell. And we're continuing, and we hit either your take profit of negative 27% or your take profit of negative 61.8%. Now, to decide on which percentage you are aiming for in your trade, it is all dependent on your other confluences. So if you look right here, we have a little bit of consolidation here. And this consolidation is occurring at the 1.17500 mark, which proves to be, if we go back, I'm sure, yep, we come back to here, consolidation, a little bit higher up, consolidation, not as much. So that's clearly a key level. So personally, I probably would have placed my stop loss at this 1.17500 mark, because there's a good chance that it was going to consolidate at this key level and not extend to this negative 61.8. Now, in this case, I would have ended up being wrong. It continued to the 61.8. However, that's only a difference of about 20 pips. So it's not that big of a deal. But just keep in mind that you use this fib retracement along with things like key levels. So now we have an example of a uptrend where we can use the fib retracement. So let's say as of now, our live data is, let's go for right here. Okay, so we have all this up to this point. None of this we know yet. This is a live trade. So you see this massive uptrend coming. Let's say you're in a buy position right now, you're monitoring it. You start to see these bearish candles forming, and you're worried, is this a reversal or is it just a retracement? Again, we're going to use this Fib retracement tool to help us figure this out. So this time we're in an uptrend. So instead of going to the highest point, we're going to go to the lowest point before the uptrend started, which is there, the lowest wick. And we're going to go to the highest point before this reversal or retracement began, which is here. Get an eclipse going here. Visualize it more. So we got our lowest point for the uptrend and the highest point in the uptrend. Okay. So as you can see here, we came down around the 38.2%. We're seeing some consolidation. It still is closing below, so I would be unsure if this 100% is a retracement versus a reversal. So I'd probably wait. And then boom, you see it hit this 50% almost perfectly, twice actually, and strong rejections. And sure enough, the green candle started again. Now, as we discussed in the last trade, we would be looking for negative 27% and negative 61.8% as possible take profit points. So if we're looking here, we bounce off the 50, we're starting to come up again. We're seeing this negative 27% is landing around a couple key levels here. So I have one set at 1.35 to 100, and that's pretty damn close to the negative 27%. So in my opinion, I would have placed my take profit slightly below this negative 27% mark because, as I said, we're using other confluences in line with this Fib retracement. And if this key level is here, there's a good chance we would have seen some consolidation, some resistance at this point. There's no point of trying to get those extra few pips just because that's where exactly your negative 27% point is. So I would have had my take profit here personally, but as you can see, it does extend past it, it does hit it, and this one isn't as perfect as the last one was for the take profit points. The 50% was pretty accurate, the 38.2% was accurate, but you can see how you could have used these as a point for your take profit. The 61.8, for example, let's say you decide you were aiming for this instead of the 27%. As you can see, we almost got to there, but we hit this key level of 1.36200. So if I was aiming for this one, I probably would have had my take profit here, considering how close it is here. Sure enough, it hits it, not quite to the exact point of this. You would have been perfect. You got it, you got out, and boom, it drops. So I will reiterate this trade as well as I did the last one. We will get rid of this, we get it going. Let's say this is where our live data is up to. We're going to click Fib retracement. We're going to come to the lowest point, go to the highest point. We're going to monitor it as this retracement or reversal occurs. There's a chance that I would have sold and watched for it to possibly come down to these retracements to catch those pips right there. You don't need to wait for it to drop all the way down here. You can look for trades here and use the Fib retracement in two different ways. You can use it to continue your uptrend and to catch the pips on the retracements. So we came down to the 38.2, consolidate around it, consolidate, boom, we dropped down to the 50, rejection, green candles going all the way up. We're looking for a take profit here. It's around some key levels, so we'd be cautious about where we would place it exactly. Here, same thing, we got our 61.8%, pretty close to this key level. Would have been smart to put your take profit around this key level. And yeah, that's another pretty good example of the Fib retracement. But the good thing about this one versus the last one is it proves to you that it won't always be 100% accurate. And that is why it is so key and so important that you use these other confluences with the Fib retracement tool. Because had you just relied on the Fib retracement percentages and you put your take profit here, and let's say you went to bed, you were at work, you weren't paying attention, you would have just missed it by a bit, and it boom, it dropped. Even if you caught it here, that's a lot of pips that you lost just because you were trying to get an extra 20 pips. I hope this video has helped you guys out a lot with understanding how to use the Fib Retracement tool, because I remember when I was starting out, this was a very intimidating skill and tool for me to learn how to use, with all the lines, all the percentages, all the numbers. It seems very complicated at first, but I hope that this video has helped and clarified how useful this can be, where to place your points, where to place your take profits, and how you can use it to determine whether a trend is reversing or if it's simply a retracement. Finally, I will reiterate one more time the importance of trading with multiple confluences and not solely basing a trade on the Fib retracement, for example. It's something that needs to be utilized along with other technical analysis tools and skills. This video is the first of many to a series where I will be breaking down all the technical analysis tools that I have found useful. If you guys would like to see these videos, make sure to subscribe to stay updated on when I release these videos. If you have any questions at all based on the Fib retracement, any other general questions, any video recommendations, anything that you guys would like some help with, clarification with, please leave the questions in the comments, or you can go to my Twitter. There'll be a link in the description to that. I monitor that quite a bit, so another place that you can ask questions or make recommendations to me. Be sure to like the video if you guys enjoyed this video, or if it helped you understand the intimidating at first Fib retracement tool in Forex trading. Thanks for watching, guys, and I will see you in my next technical analysis breakdown video.